Okay, and welcome back, students who are taking financial accounting. And in this series of videos, we are working on the theory for Chapter 11, which is about the statement of cash flows. Okay. And in the last video, we had been discussing the operating activities. So in this one, I'm going to talk about investing activities. Then I'm going to stop and do the financing activities as a separate video. And then we'll see about formats. Um, and then after that, focus on decision making, and then it'll be the homework problems, right? So, investing activities, right? Now again, notice that you haven't seen a statement of cash flows yet, okay? Because again, it's the understanding the overall concept and the thinking process. If I just give you a statement of cash flows, you have no idea what you're looking at, and it becomes difficult to understand the thought process that goes into creating that. So I think it's best learned by trying to understand the underlying activities here, the underlying processes, and then when you actually go to create it, you'll see, oh, okay, that's why I'm doing this in this particular section. Okay, so in investing activities, we were talking about when a business makes investments. Okay, and um, those investments, generally happen from the perspective of like stocks or for most businesses, it's about uh, putting an addition on their building, buying a new building, or any type of long-term asset that they create. Okay, so when they do that, uh, we'll we'll look at the increase or decrease in the long-term assets from the balance sheet. So if for whatever, let's say you buy a building for $100,000, okay, well that's an increase, you know, that's an increase um, in your asset section, the long-term asset section, the property, plant, and equipment from the balance sheet. Okay, so when we do that, we have to either add that in, or if we sell it off, we have to subtract it out because that's part of our investing activity. I'm investing in that particular business, right? So I would increase uh, in the investing activity section by the $100,000 from the business. Now, it says here plus or minus non-cash transactions that affect long-term assets from the income statement and balance sheet. Okay, so we're talking about non-cash transactions, and we either add them in or subtract them out that affect the long-term assets. A way to think about this might be, let's say, uh, um, let's say that you have this building. Okay, you bought this piece of property, you bought the land and the building, and that's an investment. Okay, so you would have an increase, in your long-term assets. But then let's say you decide that you need some kind of, you need security on the property, right? So you have to put up a fence, and then of course you have the booth where you have a gate, and the guy stands at the gate, and has to pay for all of this, right? And if it's a non-cash transaction, meaning it's going to be something like an accounts payable that you're going to use to create that security fence around the land and the building, this affects your long-term asset. You'll have to add in or subtract out that non-cash transaction. Okay, so really, as I said before, investing it doesn't happen that often. Okay, I mean it does happen, but generally it's in, businesses, they get bigger and bigger. Okay, um, where they end up having to invest in other things. I mean, if you sit and you said Caterpillar, or immediately that they're investing in this kind of equipment, or an oil rig, that type of thing. Um, you'll have transactions as far as that's concerned. But most small businesses, like let's say, for example, a family restaurant or something like that, um, if they decide to expand and they're opening up another location, then they're going to start to take on, long-term assets. But for the most part, you don't have that much as far as investing activities. Right, there's not much to say about this. Again, this, from the introduction video, we only have, this is the least used section of the statement of cash flows, but you have to understand that when I'm looking at, my long-term assets, or I'm looking at any investments I make, okay, what is the effect it's going to have on cash? And if it's part of that 5%, and this is generally where the section where the 5% comes in, where you don't know what to do, it's usually in the investing section, okay? And so if you can think through of, oh, how is this going to affect my cash, and make the adjustment for it, and then you'll know how to do that additional 5% of the transactions that you've never come across before. Okay, so I'm not going to belabor this any longer, and I'm going to stop the video here, and move on to the next video for the financing activities. All right. So again, once you start doing this, and you'll see the effect on the statement of cash flow, it'll all start to fall into place. And then if you have any questions, definitely feel free to contact an instructor, because trying to keep track of whether you're adding or subtracting can get a little hairy. All right, but I'll see you in the next video for the financing activities.